Good morning, everybody. Hey, welcome this Tuesday, the last day of April. Can you believe it? May Day is just around the corner tomorrow. Hope you're doing well as we get ready to talk about the markets. Yesterday, not a bad day yesterday. We did end up in the green ink. We'll talk about that and more. And when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that in this world we live in, there are so many things that we have no control over. However, you can take control of your investment portfolio by knowing how much risk you have versus how much risk you should have in that portfolio. Give us a call at 863-382-0037 to schedule your core retirement design. With that, we've got Dave coming up next.
Oh, 5.7 Highlands Light FM. That's John Cougar Mellencamp there. Hi there, my name is Morning Dave. It's 8:40 now, 20 here before 9. Time to check in on your money, see what's going on Wall Street. I was about to tell you it was a really pretty good day yesterday, and it actually was. Then we get to this morning, and both Phillip, Statler, and I are trying to figure out what scared the pants out of everybody on the futures about 10 minutes ago. We'll noodle it through together because Phillip is here from Statler Financial Services in downtown Sebring. Phillip, good morning. How you doing today?
Hey, good morning, Dave. Good to be back in the office today and chatting with you. Yesterday wasn't a bad day at all. I mean, not huge, but at least it finished all green. The question is today, man, it is, like you said, at 8:30, 8:35, the market just started to tank. And I mean, we only had one economic number that really came out. And
absolutely.
imagine it's really putting that much pressure on the futures.
Yeah, something made us weird off. Resetting the table, as you mentioned, yesterday was a green day. It was kind of a green day you actually like to see. The Dow was up a little over 1/3%, up 146 points. S&P about the same percentage, up 16 points. NASDAQ up a little over 1/3%, up 55 points. It wasn't a barn burner exciting up day. It was just a solid up day. And what I saw earlier this morning on the futures indicated that we were going to kind of have a hold steady opening, which I kind of expect given the fact the Federal Reserve is starting to meet today. And then at 8:30, the only report that came out of any consequence was an index called the employment cost report. And we were expecting about a 1% increase during the first quarter on the cost of employees. We ended up getting a 1.2% increase in employment costs, which, is a substantial miss. Yeah, it's not a positive for publicly traded firms, but I kind of like you. I see it as being an unpleasant surprise, but not enough to make a complete U-turn in the markets, right?
Exactly. So it's, and maybe it's that plus something else they're seeing out there, but definitely when that number hit and the markets just made a sudden, abrupt downward movement this morning.
Got to start wondering whether somebody's got a computer somewhere that was keyed onto that particular index. If it's up more than 20% over what we expect, which it is, sell something. It doesn't take a whole lot of action to move the futures markets in a wild direction, but I mean, when you start dropping 100 points from where it was in 5 minutes, you got to assume something interesting went on, don't you?
Yeah, exactly. And maybe eventually it'll surface.
Absolutely. This week is supposed to be uneventful for the first 2 days because the Federal Reserve starts meeting in their open market committee today. It's a 2-day meeting. Tomorrow afternoon, we find out whether or not they're going to do anything to interest rates. Nobody expects them to, but we'll be looking at Jay Paulson's press conference at 2:30 as to any tea leaf indication as to whether or not there's any reason to expect there to be a cut on the border in September, which I was saying yesterday. They're now down to the point of saying only the 45% chance of an interest rate cut even in September, which is kind of a difference from the starry-eyed optimism we had a few weeks ago, isn't it?
Yeah, exactly. And I actually saw one chart that said the percentage chance of an interest rate cut is 11%.
Ooh, that's even worse than the 45 I had. Under 50%, I considered a major change in outlook on Wall Street. The big kahunas are happening this week in terms of reporting companies too. Amazon probably toward the end of the day today, or maybe after it closes. It's kind of funny. There's a big, for lack of a better term, a groundswell saying they want Amazon to join the rest of the Magnificent Seven and start declaring a dividend. And Bezos is sitting there saying, no, I want to build another rocket. So I don't know for sure, but all the other big techs so far have been declaring dividends. Are you hearing anything in terms of the odds of them doing it?
I'm not. I mean, I'm seeing kind of the same headlines you are in terms of there's some rattling out there that we need to see about some dividends. But I haven't really read anything to that degree yet.
It's kind of interesting. It tends toward being an industry trend one way or the other. Broadcasting, I used to work for a publicly traded company, and one of its, it was basically classified as a growth stock. Well, the industry hasn't been too great lately on the publicly traded stocks, so in an effort to try to keep things shored up, the company started offering a dividend every quarter. Okay, cool. Bunch of the other broadcasting companies did the same. Well, draw that over into high tech. Most of the Magnificent Seven so far having reported have been declaring dividends. And all of a sudden the groundswell is for Amazon to do so. And like I said, Bezos wants to build another rocket, so it could be kind of interesting to see whether or not he wants to keep the money or whether he wants to give it to his shareholders and prop up the price.
Well, yeah, it will be interesting to see how that plays out. And most of the companies that have paid a dividend got a nice little bump in their stock price as well. So I'll have to wait and see what they decide.
And it could be, of course, Amazon doesn't need the bump as much as some of the other ones do. It's already up 21% this year. So maybe Bezos will say, go bite it and I'll buy another rocket ship or something. We do have, this is going to be the busiest trading week of the year as far as the companies reporting, the biggest reporting week of the year in earnings season from what I read. And we got a couple of household names reported end of the day and beginning of today as well. One of the big ones, McDonald's actually did not have the best quarter, did they?
They did not. McDonald's came out and they really, same store sales across the whole company now, not just U.S. or Europe. The expectation was for same store sales to grow by 2.1%. Well, they only grew by 1.9%. So a little bit of a miss there. Now, the U.S. did better than that, but still short of expectations. And so even on the earnings front, right, they earned $2.70. They missed expectations by 2 cents a share. Now, revenue was basically in line with expectations, but it's that same store sales that have really crippled or hurt their stock today, as well as, and I really didn't realize this, but in the Middle East, they've actually been a boycott in the Israeli-Hamas war against McDonald's. So that hurt some of their sales as well. They are trading down this morning, almost 1.8%.
Ooh, yeah, there's an activist boycott going on against McDonald's and a few other companies that do a fair chunk of business in Israel. And I was kind of curious whether it had any effect whatsoever. I got a sneaking hunch it has more to the fact that it's darned hard to buy a Big Mac, fries, and a soda pop for under $10 than it does any political activism.
Well, and that's the other thing they said too, Dave, in the report is that, McDonald's has raised their prices. And so it has knocked out some of the really lower income people that really kind of depended on McDonald's as their meal choice. It kind of knocked them out of the customer base because they can no longer afford even McDonald's.
Well, welcome to the world of inflation, right? I've always read when we were talking about the minimum wage increases that were waving through the economy a few years ago. I don't know whether it was McDonald's, but one of the major burger chains said that their food costs were only about 10-15% of their total cost. That labor costs were close to 90% of their labor costs. Well, okay, the labor costs are going up, witness that 1.2% increase. Now, all of a sudden, the raw materials are up by like 20% over the last 2 years. Somewhere down the line, something's got to give, and prices got to go up even on the economy line restaurants.
Well, and you got to think that their wage base, their labor costs, have probably gone up by a third, 33%, at least at a minimum. And so,
yeah, And the margins are the businesses like that make it off of volume, not off of margins. The gross margin on a burger you buy is not all that terribly big, even though it may sound like a price that'll make you sit up and take notice. But once you factor in labor and everything, their gross margins aren't all that big. They don't have that much to play with to begin with.
No, they really don't. They really don't.
So there's your education on fast food, people, for the day. How did Coca-Cola do anyway?
So Coca-Cola, they did so when it comes across the board. They beat on earnings by about 2 cents a share. So revenue was basically in line, maybe a little bit ahead of expectations. They've been able to increase their pricing, kind of like everybody else. Their product mix were kind of those two things were key drivers in their revenue growth. But they are trading down about 0.4% this morning.
You're just full of merry sunshine this
I'm
morning.
trying, Dave. I'm trying,
Anybody winning this morning?
Hey, I do got one that's winning. Eli Lilly earlier this morning popped about 7% this morning. Their diabetes drug and weight loss drug reported first quarter was a big deal, a big help for them. They came in at $2.58 a share, well above the $2.46 a share that was expected. They even hiked their full-year guidance for adjusted earnings and revenue above what the analysts had expected. They are trading up right now about 6%.
Well, that's good news. If you can't afford a burger and fries, at the very least, you can lose some weight and buy some Viagra.
There you go. Hey, the last one I have for you today, Dave, is 3M. The Post-it note guys. They posted a pretty good quarter. They came in at $2.39. That was about 29 cents ahead of expectations. Revenue was ahead as well. And so they are trading up this morning almost 7%.
Wow. Good to hear. Resetting the table for the morning. It was a modest up day yesterday on Wall Street, and something, and our only guess is the employment costs being the biggest increase in a year and a half, scared a few people down the line. 45 minutes before trading opens this morning, what are we looking at, Phillip?
Hey, right now we're looking at a lot of red ink, Dave. We got the Dow down almost 50 basis points, 0.5%. The S&P 500 is down almost 0.5%. The NASDAQ 100 is down 0.5%. The big loser this morning, Dave, is the Russell 2000. It's down almost 1.2% this morning.
Ouch.
Yeah, big down return there. On the other side, we've got some green red ink over there too. We've got silver down, 3.3% this morning. $26.75 an ounce. We've got gold down 1.7% to $2,318 an ounce, and then we've got crude oil heading up the other direction, up 0.6%, $83.13 a barrel right now.
I got a sneaking hunch about the only people that are going to make money today are the people who have the VIX. Overseas markets, it was a mixed bag at the 6 a.m. close on the Asian rim. Mainland Chinese markets off by a bit. Most of the rest of the markets were up overall. Call it maybe a 0.25% gain on the Asian rim. Europe, again, I'm going to say I got delayed quotes, so they haven't had time to react quite yet to our fall off the barrel number at 8:30. But even allowing for the fact they haven't had time to react yet, I'm off by about 0.33% across the board in the European community markets halfway through their trading day as well. If this scares you, you got too much risk in your portfolio if you're getting anywhere close to retirement, and that means it's time for a good pair of eyes to figure out how to insulate yourself from that risk. Phillip, how do I find you to get that risk out of mine?
Absolutely, Dave. That's why I developed the Core Retirement Design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
And back here tomorrow morning to talk about what the rumor control might have out of the Federal Reserve, because we'll know on Thursday morning. Thank you much, sir. We'll see you tomorrow.
All right. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. It's
Hey, folks, again, I want to thank you for joining us today. Have a great day. I look forward to speaking to you again tomorrow. Take care now.